Okay, it was a good week for the JSE last week, a fairly good week for the Rand, a very good week for gold. But there was a report in the Sunday Independent that said that, the Rand is currently not trading at its weighted average internationally. And by 2010, we're going to see the Rand depreciate significantly. And that's not an indication of investor sentiment in terms of confidence in the South African economy, but it's going to take the Rand back to what is its tradable rate.
Well, that will be good news for us. But want it now, given the fact that the JSE is roaring, is indicating that investors are looking forward that, we may be coming out of this deep challenge that we've got economically in the next 8 to 12 months. However, if you look at the currency and how the management thereof is doing to manufacturing particularly, and really supporting jobs, making sure that when the recession ends, South African companies can compete. We find that we needed to have done more, bought more dollars, so that we can start now to support the economy and make sure that it trades at its true value. We should think around between 850 and 950 could be true value for exporters. The
relationship between the Rand and gold, when we're seeing the gold price soaring at this level?
Well, that relationship had ended. What we've seen is that the dollar, because of the realities of the American economy, that they've put so much into the economy, they're running huge government deficit and of course the trade deficit, and therefore the dollar in the long term should be very weak. So the Rand has reflected that. But the challenge for us is that if we are gonna become a strong player internationally, we need to make sure that we support industry, and through the currency management, that might be one of the ways, given the fact that there's no demand at all, except for China for commodities, but our manufactured exports are struggling.
Okay, even though we know that many foreign investors are pulling out of dollar-denominated assets, and hence the kind of pressure we're seeing on the US dollar, people are hoping for these green shoots coming out of the US economy right now, as we're seeing third quarter earnings results coming out of the States, suggesting that things are not as bad as we previously anticipated, especially when we saw the recent jobs figures coming out of the States. The retailers are doing a lot better than we expected. Obviously, companies such as Alcoa doing fairly well, being in the steel fabrication industry. The bank's results will be coming out this week, and we'll get a real sense of the appetite for risk within the financial system within the United States. And if those figures are fairly better than expected, and we get a sense that the US is doing better, will that prop up the dollar?
Absolutely. But the challenge, I think, for other emerging markets that did not intervene, such as South Africa and Russia, as we've seen with Medvedev coming out now at last, saying, actually we're in a deep crisis. Yeah. We didn't do anything as government, and now we can see how deep the recession is. So those countries that took action in backing up what had been done in mature markets, Europe, America, such as Brazil, amongst others, and Chile, they're going to recover much quicker, and hence the demand for emerging market stock an instrument, including South Africa, are benefiting from that demand. However, because we intervened and acted as early, we're going to find ourselves that it's going to take us quite a while to recover.
Obviously, the Rand is also influenced by the inflation situation in the country, and so far we're seeing that the late action, which many people say is a late action by the Reserve Bank, has started to take some effect. We're seeing credit figures a little bit better improved in South Africa, and we're seeing inflation coming back within the target range. But we've also got Eskom now approaching the National Energy Regulator for another set of hikes. And if those hikes are approved, the consumer is looking at a 60% increase in their electricity tariff. And that means inflation all over again out of that target band.
Well, in fact, the reality is that we're going to have a very stubborn high inflation. So we're looking probably in the range of between 8 and 10% in the medium term. What's important, on energy, which we've discussed on CNBC, is really around the state and the left accepting that, the days of low tariff is gone, and the days of a monopoly player in energy is gone, and therefore we bring in competition to the sector. We know that the private sector is ready to invest through what is called independent power producers. There's a whole opportunity of green jobs in terms of industrial policy that is waiting for South Africa. But we need that leadership, we need that commitment.
I think that leadership and that political will is really the impediment here, because in as much as we see NERSA issuing tax rebates and incentives for people to come into the energy space, the costs of capitalizing investments in that space are so high that for the foreseeable future, Eskom will still be the monopoly player.
Well, in fact, if you talk to independent power producers, that's not the issue. The issue is the refusal by the monopolist, Eskom, to really offer a tariff, or at least take up the power that's being produced. So there's a whole disagreement around what we called purchasing power agreement, that's PPA, where Eskom has to commit. So from private sector perspective, they're willing to come at these low tariff for them, but they want to ensure that Eskom does take the power, and Eskom is refusing to play ball, and it can only do that through the intervention of the Minister of Energy, but also the Parliament, just to make sure that, you know, South Africans do have alternatives. We have a mixed bag in our houses, from solar to gas to electricity that we get from Eskom.
Yeah, and actually on that front, we were told this weekend that the Clinton Foundation had set up a climate change initiative in collaboration with the South African independent producers, and they've built a solar park. The cell phone company is also coming under scrutiny. All the weekend newspapers reporting that there's been a directive from Cabinet that says by the end of November we have to see the first phase of reducing cell phone costs, and that will be systematic into 2010 to make sure that people, by the time the World Cup arrives, can watch those games on their cell phone without it being expensive.
Well, I mean, for me, that's much less of an issue. The reality is that if we had really intervened on the terrestrial, because for me, telecom is a big problem. The cell phone thing is a choice that we have got as consumers. But terrestrially, if we had invested more, made sure that broadband is available, accessible to South Africans, and South Africans can then digitalize on themselves, and cost of doing business come down, we'll have done more and much better than focusing only on the mobile. So I would like to see a much more sustained intervention around broader ICT sector, supporting it, making sure that the cost of doing business come down, the logistic costs come down, but also create jobs there, because we know that the long-term competitiveness of South Africa doesn't rest in commodities, given an endowment, but rests as well. Perhaps that ICT sector could be the sector. I see today Johan Rupert is talking about the free trade zone in the Western Cape to create a new Silicon Valley there. So we need the broadband, and terrestrially that becomes critical. So I would like to have seen government and NERSA pushing more also on telecom and making sure that we speed up the openness there. I know that there's 2 additional players in Yotel as well as in Fraco. Those need to make sure that they open up, particularly for consumers and small businesses.